Hey, Dave Nutt here at 123daytrade.com. Thanks for watching. Thanks for being here. I promised a recap video today, and the concept that I want to talk about in this is what I'm going to call a turning point or turning points. So, turn points, turning. So, what I'm going to say to this is some turning points are easier to see than others. So, with that being said, what defines a turning point and why does it turn, and really does it matter? So that's kind of what we're going to think and talk about and go over some of the trade scenarios or trade setups one that I took. And first off, though, we're going to go back and look at where I screwed up my day. So I opened up the charts. Let me go back far enough. Okay. So I opened up the charts. I think it was like 5 a.m. So it was like 6 my time, and I got up here and looked at it about 5:30. So about 5:30, 6:30 my time, I started looking and I started noticing that, hey, we're doing something. And I was wondering what I was wondering at the very beginning of time, if I can get to the right point. Yeah, this is what I was looking at. So what I was noticing early was this versus this, and I really wasn't looking at that back there. But if I did look at this back here, did this buying outweigh the rest of this selling? I've debated about that over the years of looking at a tick chart, and what I've come to the conclusion is it's really moot until you have an event come into the market. For instance, right here, hold on a second. Okay, I'm back. So the event comes, this is the first event that comes into the market during the session, and this ends up being what I would tell you is high volume bar. And it's red in color, but it's the first event that comes into the session. What happens is it sells off to start with, which is a normal thing with a red bar. It can sell or it could support it sometimes, but don't get caught up on what the bar and the volume, don't get caught up on what the price action is doing. Just pay attention to the volume bar itself. So the bar itself prints, and this is the bar it prints off of. So a lot of times you'll see me, or maybe you don't see it, but I look back and I think, okay, where is it good or better to take a long trade on? Now, the bar itself is a good barometer of where there can be some value to be long, and then underneath it, value to be short. So if you take that into account, and you'd have to be Johnny on the spot to catch the short side of this, but if you did catch it, if you saw it print and you were able to catch it, you would want to be short below, long above. That's kind of has been my thought process as it relates to a red bar. Doesn't make it right, doesn't make it wrong. It just what I thought about as time goes on, and what I want to do is I want to, let's get rid of this up here for now, is put in the trend line into this bar. So, and then I want to basically bracket out this bar itself so that we can see an area that if the market got to, it would make sense to be long above, short below, and then this is the dead zone. And does this play out today? Now, I ended up getting short a bunch of different times right in through here. And this is where I screwed the pooch personally in my trading account. I did catch this and it moved up, but I was trying to catch the low. And I ended up getting hit. But what I was trying to is I was trying to take it up here, up here, up here, and all that. Now, what I've debated about over the years of taking on longs is where is their value in the long? Now, here is a perceived bottom, and here's a perceived top, and then it goes a little bit lower. But the first time it sets up a 1, 2, 3 is right here. A perceived 1, 2, 3. And what I would tell you is this would be the only amount of time that you would want to be long above now and short below after it establishes itself. And this channel itself works kind of like a Gann setup. And what I got involved in was obviously pre-market, right? And I was looking at this bar and this bar and that one there. And I was thinking the bottom was in with these 4 and then this 5th one right there. That we were bottoming out and I wanted to be on the long. What I ran into though is just some bad trading decisions overall that I wished I had back, even though I was taking, sometimes I was only taking 8-point hit or 6-point hit. They all start to add up after a while. So this volume, 1261, and then this volume comes in next, which is not over 1,000, and that kind of, I don't want to say it tricks me. I just think that during the session that there was no blue bar volume to be had, and we'll find that a little bit later in this video. I'll show you, the easy setup that was taken on today is actually the short setup. So the long itself comes through here, and then you see, I believe I got long right in here, and then I think I got long somewhere in this area too that ended up being a decent trade for me, or at least I thought it was going to be. And then the 8 o'clock opens up, and then we trade down again. This is where I got stopped off of that trade and ended up only making like a tick or two on that. And then somehow or another, I ended up losing the rest of the day. But so here comes this trade here. Now, what could we say? If we want to be short below, long above, then it barely gets long right here, and then this blue bar prints right at the open. So getting long above and then going short below. So a reversal signal on this is right here. So let's take into account that this bar is highest volume bar. And that's what we want to be, long above, short below. So this ends up being highest volume. So let's say that we ended up getting it 6803 and then promptly get taken out right below it. But we have this signal to come in underneath this. You with me? Hopefully you're under with me now. So those are the lines in the sand that we first drew on the charts. Now, what we see right here is a new highest volume bar print. So short below, long above. So let's get that trend line going. And I'm just in real time trying to figure this out. So I want to be long above and I want to stay short below. Now I'm already short from here. If I would have traded properly, I'd have been short from this point coming down through this area. Now this bar prints and it ends up being a spot that I want to move this trade down here and get out and go long above. Now I ended up getting long right here and got lucky and it went up from here. But let's look if I would have waited. So the reversal point happens right here, where I'm getting out of the short trade right in this area, and I'm taking on the long signal. And there's our previous, and this is the bar that comes in later, but it's not highest volume bar. So these are the bars that we're looking at right now. Short below, long above. It stays in the trade. Barely, but it stays in the trade. And then it moves up. Now, what happens at this point? At this point we see the highest volume bar and it turns the other direction. And it corresponds with this bar right here. Whoops, wrong line. Maybe I already had that on the charts. Okay, so we want to be short below, long above. But now it's reverse. I wanted to be long above, short below. Now I want to be short below, long above this line. we see another print right in here. So we have a 2000 volume bar, then we see another 2000 volume bar right in this area. This gives us the ability to bracket up here. And really I want to concern myself with this short below. So there's your entry point going into the short side. This is where I physically got out of the trade and where I would have been short right underneath this area right here. And from this point to right now, we've been down. So the highest volume bar in this case is still, I'm looking to see if it's in 29.92 versus 24. So I mean it's trying the bottom, right? And it was violent. And even this bar short below looks like it was okay for a while until it made its move back up through here. So what I'm getting at is trying to resolve how I want to take on the long. Now I ended up getting, like I talked about, I ended up getting this long. I picked off this long down here at 53. And I've asked myself, why did I like it then? And it has to go back to yesterday a little bit. And I saw this second red bar. So just like we saw two blue bars up there for the short, I see this second red bar, and then I was willing to go ahead and get into this trade at that point with the low being right there, you know, so I was going to risk. So when I entered this trade at 53, I had a 47 stop or a 48 stop on the trade itself. So I was at very low risk, and I was looking at the reds and what we did and where we are. We're trading in between pivot and R1. And there's your pivot. And I was looking that, hey, this is good. This, and I've seen this before, that this could be the bottom and we could go on up. And I was right on this, and I was wrong before. What I'm going to say though is pre-market, you really need to have a proper setup to get involved in the trade. And pre-market means before 8 o'clock my time for me. So I need what I need to see is a 1, 2, 3, and then get involved into it. And if I'm going to use the volume bar, then I need a bar that I want to be long above, short below, pre-market. And that would keep me away from a lot of the bad stuff that happens in my trading account, and keeps me out of this stuff where I lost my money. And all this happens pre-market, pre-start of the American markets. And then the volume comes in here, and it starts to make some sense, right? We already know we want to be short underneath this. We're able to get out of it, or maybe we could get some more profit in there. But this is the point that that you could possibly reverse right in this area, and then you could have taken it up for a while until you started seeing all this. And all of a sudden, this ends up being a really nice entry point right in this area right here, following the highest volume bar, where we are once again want to be short below, long above. In this case, we want to be short underneath it and stay long above it. So it's some of the things I'm formulating and thinking of. And there's still a lot more work to be done. But this setup here, this short setup is pretty much out of my trading arsenal book. I know that if the market breaks above, it's got a tendency of staying above it until it comes underneath it. And that's just the way this thing works to start with. This volume relates to something, some event that keeps it, in this case, moving in the direction of that particular move. And then the second one comes in, and you can see the top forming, and then the sell-off of that top. You could physically have been out of the trade right in here, but I would tell you, when you got the blues, you want to see a 1, 2, 3 setup. So what I want to see is this, and then I want to get in this way, because I know that the blue can overpower the red, and when you go short, the market has a tendency of having a hard time to come back and through an area that has perceived resistance, more so than an area that has support. Support's usually easy to get down and through, but resistance is a lot harder to get up once it's printed and put on the charts. Doesn't mean it can't, just means it's harder to get to it. Wow, what a nice down day here today. So this down day just continues to move down throughout the session. A 69.22 to currently where we're trading right now. $67.71. It's went down 150 ticks where I was looking today that I thought if we would make a move that it could have moved today. So this was a wasted opportunity in my combine, but not a wasted opportunity as it relates to how I've been trying to think of how I want to take on the long side of the market. So nice sell-off today, being Tuesday. So the market makes its high at 39, and last time we were up here it was 55. It went up to 39 today, and then it sold off since that point. It had a close turnaround right in here, and then it just kind of gave up the ghost at the end. So I'll continue to work on this and then let you know how things are going. But there's some things that make sense to me, and there's other stuff that makes no sense. And I'm trying desperately to figure out where I find value, where I want to be involved in it, and where I want to be not involved in it. So the best setup of all was the short today. If I would have had enough ammunition in this could have been a really nice winning day for me. But I always know that these kind of days will come along again. If I do fail this combine, I know that there's more that will come behind it. I'm confident that there's some things that I've seen that make me feel like I've got a point where I'm a little bit more confident in taking that long signal on in the near future to find a spot that I need the market to get to. So to take on a long, I'm pretty confident in my short side ability and seeing what I believe is a top, but trying to find what a perceived turning point, in this case the bottom, has been a lot more difficult for me. Now once the market decides that it gives up the ghost like this and gets below your S1 line, I'm not really looking to get long again. What I am talking about for the most part is trading in between R1 to pivot and pivot to S1. So that's kind of my thinking right now, where you're trying to find your trade and put it on inside a range. And then once it gets down below here, the only thing I'm looking at that point is a continuation of a short trade, and hopefully I am just moving my profit target down with it. That's the way I've been able to capitalize and capture most of my gains on the short side, as I'm not looking to find the bottom after we've crested S1. I'm just looking to how far or how much profit am I going to get on a trade. So that part, I'm pretty confident that today could have been a really nice long winning trade day, coming in here at basically the 930 mark, and then from that point forward giving you a nice win. Market, after it crested here, it never came back to the 22, 24 level for the rest of the session. It was no, this up move is only to 98, 69.08. This up move right here is at 68.73. So it never crested again after that point. So anyway, some of the things, the thought process that's going in my head, I don't know if it'll be beneficial for you or not, but it's me trying to formulate a strategy of how I want to take on the longs. What does it look like? If there's two of them combined, there could be a place that you can two with 1,000 with no high blue bar volumes in front of it, in trading in between, pivot to R1. There's all kinds of things that are going through my head right now of how I want to take on the market on the long side and on the short side. So that's some of the thought processes that's got in here, and maybe some of this stuff will start to make sense and sink in at some point. But it's just to the point where I feel like there is some I know that the turning points involve the volume area. The volume is the key that unlocks pretty much everything. It's a matter of interpreting that data out and then finding a proper area that you want to be involved in that trade based upon the volume. And honestly, that's the key to trading. If you can figure out where you want to be long from and where you want to be short from, I mean, and you can be successful in doing it, meaning that you take more away from the market than you lose as an overall trader, then you're on to something. So I'm going to leave you with that thought process right now and how I'm interpreting the data out. And we'll see how it plays out. Tomorrow's inventory day, so I'll be hitting the CL pit strategy, and then Thursday, Friday, I'll be trying to, obviously Wednesday, trying to stay in the combine. And then Thursday, Friday, try to play out this and pull out this combine and get up above that $2,000 mark and move on into FTP. Hopefully, we'll see. All right, bye for now.